Welcome in, folks. We got an action-packed day here today, and I got an action-packed video for you. 4 reactions up for you here today. Okay, first one up here. Tom Lee, everybody's favorite bull. Russell 2000 will see a 40% rally by the end of summer. By the end of summer. All right, we're already coming upon late July, so that's a big statement. Okie dokie. Let's get into this.
Friday's inflation data will likely shift the odds higher of a July and September rate cut, supporting the summer of small caps, as he said. Joining us here at Post 9 is Tom Lee, Fundstrat Global Advisors, Head of Research, and a CNBC contributor. Tom, it's great to have you.
Great to see you.
You want to start with what the political news or the economic news? What's more important to you, do you think?
In the short term, it's the political news. But really, in the longer term, especially into year end, it's actually the economic news.
Explain why.
Well, in the short term, markets are very sensitive to, especially the sector level, depending on whether it's a Republican or Democratic taking the White House in November, and then especially all the congressional elections and state elections. So I think that's what you saw last week, is as probability shifted towards Trump, small caps, industrials, financials rallied.
And you're sticking with that call, which is for what, 40% over 10 weeks?
Yeah, the overlap is small caps are very sensitive to a Fed cut, and really the probability of a Fed cut, that it's finally happening. And I think it's going to look like the October to December 2023 rally, which was almost 30%. This one should be bigger because of the amount of short positioning and the amount of oversold in the Russell. So, yeah, 40% by the end of the summer.
That's an insane prediction, first off. Absolutely insane. But we know Tom Lee makes a lot of insane predictions. And I would say most don't come true, but every once in a while, one does come true. Now, let's see if small caps are actually rolling here today. Okay, let's go ahead. Let's take a peek. Not the oil and gas stocks. No, I don't want to hit that button again. Come on, man. I'm going to this one. Alrighty, let's take a look. What do we have? So, let's look at the best stocks here today. ELF, not really a small cap anymore, although it sometimes gets grouped in there. So that one's doing well. It's my best stock here today, 6% plus gainer. The Planet's up about 4.6%. That's a micro cap, but that's on the back of Kamala Hope, actually. And with B-Man not being in this election, the hope is, from the MJ stock side, if Kamala was elected, that would be very bullish for those stocks potentially. We'll see. Fubo's up about 2% here today. Other than that, Revolve's up about 1%. SoFi is down very slightly. Honest is down very slightly. So not exactly a super bullish day for small caps. And the Russell's up a little less than 1%. So it's not that it's a bad day for small caps. It's just a decent day out there, but this is a crazy call.
Dig into it. Does it make sense that tech, that NVIDIA and Tesla and Microsoft and Apple and Meta should be outperforming as the odds rise for a Democratic victory?
Some of that, it's, day to day, it can be noise, because last week you had the biggest down week for the NASDAQ in quite a long time, so I think there is a bit of a dead cat bounce. But to me, I agree with you. I don't think that the FANGs are necessarily a Kamala Harris, taking the White House trade.
But there is some evidence of the fading of the Trump trade, as you mentioned. Russell's underperforming, Bitcoin weaker today, financials are lower, so are energy stocks.
Well, again, it's, the sell-off for the Russell started in the middle of last week. It's down almost 5%. It is a mirror image of what happened in October. After that first week rally, you had a 5% decline over 8 trading days, and then you had essentially a 25% rally for 7 weeks without a drawdown. I'm not sure that's any different today.
Is your long-standing optimism about deflation really changing at all? Do you expect any surprises on Friday?
One print can be uncertain, but I think the forces underway for inflation to fall like a rock are in place. I mean, the reality is there's a durables recession. It's in housing, and now it's in autos. That's like 60% of the CPI basket is in a decline until the Fed really injects confidence by cutting. And so I think there is urgency for Fed cuts to happen sooner. But at the same time, I think the effect on inflation is there isn't another incremental driver for new inflation. So inflation, I think, is going to surprise to the downside, and hopefully it's Friday.
Energy, same story. I know we've got gasoline futures lowest in a few weeks, and we broke 80 today on WTI. Brent's below the 200-day.
Yeah, I think energy is a tough trade in the near term because as long as oil's under pressure, I'm not sure I want to be overweight energy stocks. And if there's drilling under Trump, that's downside pressure to oil. But over the next 3 to 5 years, I think energy is a great investment. But I think this year it's not really going to be the spotlight for us.
Interesting. So, do I think small caps will rally? The Russell's going to rally 40% by the end of summer? No. I wish that happens, but no. We got to be realistic about these things, right? And Tom Lee went into this year talking about 50, 60%. Small caps are going to rise, and obviously we're not even remotely close to that, right? I mean, the Russell this year, honestly, it's done okay. But I believe the Russell significantly underperformed the other indexes, just to be quite frank. Let's see a year to date. So the Russell's up 11%, right? And a lot of that's obviously come very recently here. I don't even think that's beating the S&P 500. I know it's not beating the NASDAQ. For sure not beating the NASDAQ, right? And then let's pull up the S&P 500 as well. So if we go ahead and take a peek here, yeah, the Russell's underperforming the S&P 500 significantly. It's underperforming the NASDAQ by a mile, right? So, yeah, Tom Lee, I think, is getting desperate for this insane rally to happen in small caps. And, certainly at some point in time, small caps are going to play a game of catch-up, and it's going to be fun. But, yeah, some of these calls he makes are just absolute insanity, man. 40% by the end of the summer, 50, 60% this year, and, here we are sitting at 11% for the year, significantly underperformed the S&P and Qs, right? His call would have been better if he would have said the NASDAQ's going to be up that much, right? Hey, it's Jeremy. I hope you really enjoyed watching that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That's my advanced software that I've been working in the background creating for a long time. This software is so much more advanced than what others are presenting out there in the market. And as somebody that's been in the market 15 years, I want to create something that was simple, that had exactly everything I needed to make my judgments on companies, such as forward P ratios, 2-year out forward P ratios, price to sales ratios, forward price to sales ratios. I wanted the ability to be able to compare different companies versus each other. I wanted to be able to compare a Meta versus a Google versus an Apple and be able to see all those different metrics laid out all next to each other. I wanted a service that I could listen to conference calls right through and even be able to toggle and adjust the speed I wanted to listen to those conference calls. I wanted a service that I could search SEC filings right through. I wanted the ability to do that all in one service, and that is exactly what I've created with 1000xstocks.com. If you want to apply for access to this, go to the description area of this video. You can click that link and go ahead and apply for access to this. If you don't want to do that, you can go to 1000xstocks.com. Enjoy. You got to be flipping my flapjacks. Back to the regularly scheduled programming, folks. Public count $36,000 plus up here today. I'm sure you guys are making some good money out there in the market here today. And why is that? It's the usual suspects. The usual suspects are doing very well. Look at Tesla, massive 5% plus move here. $22,000 plus up in the public count here today. Meta's having a good day. $20,000 plus up in that one. Google's earnings are obviously coming out in the next 24 hours. That's going to matter significantly to Meta. It's going to matter significantly to the entire market in a huge, huge way. NVIDIA stocks rolling up nearly 5% here today, up $1,700 in the public count. Smaller position for me overall, right? Meanwhile, we got a very, very, very popular stock in the market that now is down 50% plus in the past 2 months. And this is during a good stock market. This is honestly the most vicious crash I've probably ever seen, to be quite frank, for a popular stock, because usually if you're going to talk about a 50% plus drop for a stock in a matter of a couple months, especially when it's a popular stock, that is, right? It's a well-known stock. It's usually got to happen during a market crash or a major market correction. This is during an up market. This is incredible. And so we'll speak about that stock in this video, okay? Then we're going to talk about this one's even another level of insane popular stock that every single time the stock bounces, it gets sold right off, down another 3% plus in regards to that one. We'll talk about if that's an opportunity. Shopify continues to go down. That stock just can't catch a break. Down over 17% for this year. And it's crazy. Look at the divergence between the Qs and Shopify. I mean, this is one of the biggest divergences you'll ever see between the Qs in Shopify in a short amount of time. Absolutely incredible what's going on there. Now, meanwhile, since the IPO of Shopify, obviously Shopify's destroyed the NASDAQ. Shopify's gained 1,600 plus percent since 2015, whereas the NASDAQ's up about 339%, right? You have Ulta Beauty down again here today. That stock's sitting on only 11% gain in the past 5 years for one of the most well-run retailers in the entire world. We've got to talk about Ulta. Look at this. Company last year did nearly $1.3 billion in net income. And if you compare that versus a few years ago, they were doing $700 million, $650 million in net income, right? This is where valuation matters. Think about it. Back then, the company was trading at forward Ps in trailing 12-month Ps, probably a 30 plus, which is pretty expensive for a retailer, right? But now you look at the stock, forward P of 15, trailing 12-month P of 14, 2-year out forward P 13. Ooh, okay, so now we're getting a fair value, so we'll speak about that. Boston Beer Company, now down 27% in the past 5 years. That's another stock that's addicted to going down in an up market. You got to think about it. What if we were in a tough market? How much would some of these stocks be down, right? If it wasn't for the S&P 500 NASDAQ hitting new high after new high after new high, you got to ask yourself. And I need help. I need help. I need everybody's help in the comment section. Please do me a favor, okay? Do you drink beer? Yes or no? Let me know in the comment section. If you do drink beer, how often do you drink beer? Is it like every day after work? Is it like once a week on a Friday night, or once a month, once a year? Please let me know if you drink beer. And if you do drink beer, how often? I would love to hear from you guys in the comment section, because I'm genuinely curious, because I'm doing some research in Boston Beer Company right now, trying to get, up to date on in regards to the company. I'm just trying to figure out, is there like a fall off in regards to beer sales? Maybe people don't drink anymore because it's too expensive. I don't know. Like maybe just people aren't interested in beer. I don't know. All I know is this stock is doing horrible. I'm doing some work on it, trying to see if there's an opportunity, okay? So we got a lot to talk about in this video. Let's talk about opportunities in this market. Let's talk about some fake opportunities in this market and all those sorts of things. Appreciate y'all joining me as always. Thank you so much for being here. New all-time high subscribers in the history of the channel. 733,000 and almost 500 subscribers now at this point in time. Appreciate y'all. And for the pinned comment down there today, if you're looking to take your investing game up to a much higher level than where you're at right now, you're looking to take investing serious. Well, for serious investors, I have my private group that gives you access to all my premium course curriculums, teaching you everything I got up here, gives you access to the private Discord chat, access to exclusive weekly videos teaching you different things. I produced a video for the private group just last night that we released this morning that went all into my hedges over the past couple of years. What hedges have gone well? Why did they go well? Which hedges went bad? Why did they go bad? So, we get into a lot of those more complicated subjects that, you might not cover on YouTube, right? Alrighty, so first up here, what is this popular stock that just keeps crashing? And is this an opportunity, okay? It's Celsius. I mean, this stock is in complete free fall. And this is probably the worst stock I've ever seen for a 2-month crash, because it's such a popular stock. I mean, here's the deal, okay? The market's up about 5% in the past 2 months. You can look at the S&P 500, you can look at the NASDAQ, up about 5% roughly in the past 2 months, which is great performance, by the way. I mean, that's about as good of a market as you can imagine. So we've had about as good of a S&P 500 performance and NASDAQ performance as you could imagine. Around 5% in 2 months? That's phenomenal. And yet the stock has still crashed 50% plus in the past 2 months, right? There's been relentless selling on the stock. It seems like there's no big buyers stepping up for this stock. We're not getting any news of anybody coming to save the day in regards to this one, right? And this is all during a time period, and I'll show you the details around this, when Wall Street's heavily bullish on this company, which is one of the scariest things you could ever see. One of the scariest things you could ever see in the market is when Wall Street's all bullish on a stock, and even with all the help of Wall Street and all the analysts coming out and being positive on a stock, it's still crashing nonstop. This is downright frightening in regards to the stock, okay? Check this out. So the first one, look at this. Celsius down 50% plus in the past 2 months. And look at the S&P 500, 4.5%. NASDAQ's up about 5.8%. That's as good as it gets. That's as good as it gets from the index level, and this is as bad as it gets for a stock. That's a ridiculous divergence. I mean, it's one thing if a stock falls in an up market. It's another thing if it loses half its value in that short amount of time, right? Brutal selling. I mean, the chart is self-explanatory. You don't have to be some technician to look at this chart and be like, that's brutal, man. Look at this. The falls, when this stock falls the past 2 months, It is like down in a straight line. So when whoever like steps up and starts selling their stock, they are just brutally selling. And when I say brutally selling, they're just selling at whatever price. Like they don't care. They literally don't care. They just want out. That's always scary because you're like, why are they pushing that fast out of the stock? Like, is it that bad? And then you got to worry about also the dynamic at play, where essentially stop losses are being hit and you get a brutal amount of selling, and you got a fund or whoever, a high net worth individual, whoever, just like, get me out of that stock. So they want out, right? Then other people's stop losses get hit, auto sell, right? Those auto sells hit, they produce more auto sells, they produce more panic and fear in regards to stock. And look at this. I mean, look at these drops. It is just down in pretty much a straight line. It's like people are like, literally, I don't care what price you get me out at, get me out, get me out. I don't care if it's 90, 80, 70, 60, 50, 40, get me out of this stock, right? Third thing is, you look at news in regards to Celsius, where's the big buyers at? Like usually you would think with a stock that's as popular as this, and with as much kind of, let's just call it as big of a move down, you would think there'd be some news of somebody, some fund, somebody stepping up and buying the stock and saying, hey, we got problems with the company, we're going to come in, we're going to be activists, we're going to help fix this problem. You would think you would see something, and we just don't see anything. There's just no news about a big buyer coming in to save the day, which then makes you say, okay, because it's not like Celsius is a hidden stock like it was 5 years ago. It's a very popular stock. So why are all the big guys saying we want no piece of this, right? That's another thing you kind of got to ask yourself in regards to a situation like this, right? But the fourth thing, and the scariest thing by far in regards to this whole situation in regards to stock, right, is Wall Street is heavily bullish on this stock right now. And even though they are heavily bullish, it doesn't matter in regards to stock price. Check this out. This is analysts, or do they think the stock's a strong buy, a buy, hold, sell, or strong sell? In the past 90 days specifically, so this is recently, right? 8 analysts, so by far and away, the most analysts, believe the stock is a strong buy. Then you have 6 analysts that believe it's a buy. So we got 14 out of 18 analysts, right, that believe it's either a buy or a strong buy. And that's in the past 90 days. 3 are at hold. None have a sell rating on this stock. And only 1 has a strong sell. So there's only 1 analyst who's actually truly, really bearish in regards to Celsius. Which makes you think, what's going to happen if Wall Street starts to turn on this stock? What happens if these strong buys move to buys or holds? What happens if the buy moves to hold or sells, right? And what happens if those holds then move to sells and strong sells? What happens when you get the whole huge down cycle in regards to the stock price, right? Because we know these analysts always come out with not just do they think the stock's a buy, a sell, a strong buy, but they also additionally, right, they all come out with their price targets, their 12-month out price targets. And these price targets are insane. You guys see the price targets? The high is 110. The average is around $80, just under $80. The stock's 47. So analysts are likely going to have to chase this one down, which adds more fuel to the selling pressure as Wall Street starts to get more and more bearish in regards to stock, right? And so when you think about the Wall Street down cycle that could be coming in this one, you could get another 50% down move here. Now, I wouldn't bet on it. I'm not like, oh, let me play some puts on here because the stock's going to $20-25. But I wouldn't be surprised if you saw another 50% drop from 47 right now, or 48, right? And it goes down to 24 or something like that. All you need is all those Wall Street folks to all of a sudden turn from bullish to bearish, and you'll get there. Because that will just be a whole new level of selling pressure in regards to stock, right? But you're getting obviously Wall Street concerned. We're still in the early innings. I think we're kind of in the first or second inning in regards to Wall Street being concerned with what's going on here at Celsius. Celsius flirts with 52-week low amid sales growth deceleration concerns. Celsius fell again on Monday. Crazy thing is, when I'm taking those screenshots, that's not even the lowest. It was down like 6% earlier in the trading session, right? The energy drink stock swapping hands at the lowest level of the year and threatening to breach the 52-week low of $45. B. Riley Securities lowered estimates on Celsius holdings and cut its price target to $80. Think about how bullish they still are. The stock's in the 40s now. And you got this guy coming out, he's lowering his estimates, he's cutting his price target, and he's still at 80. That's frightening. That is downright frightening, right? And I understand if you're kind of newer to the market, you might not get why this is so scary. But I'm telling you, like, if you've been in the market a long time, you're looking at something like that and you're like, that's downright frightening, man. That these guys are still that bullish. Like, what happens if they actually change? And they're like, oh, no, we're wrong in regards to this, and they flip the sides, right? He says, quote, although Celsius sales are still growing, gleaned from snippets of third-party data that we do not subscribe to, I'm guessing that's Nielsen data they're referring to, right? The rate is moderating substantially, impacting to some degree by broader backdrop of the energy drink category, which ex-Celsius has been running negative. Now that's scary that the energy drink category has been running negative. Either there's a move out of energy drinks in general, which is obviously extremely bearish for Celsius, because then you could talk about a shrinking TAM. Maybe there's something going on in the economy where people aren't getting as many energy drinks because they're not getting as many hours or things like that. Like, that's all stuff to consider, right? A lot of the folks that drink Celsius work, I mean, I don't want to say everybody, but it's a big portion work like blue-collar jobs, hourly jobs, things like that, right? So I don't know, something to take into account. Separately, Morgan Stanley has warned that investors could stay cautious due to the difficult sales comparisons for Celsius over the next several quarters as the company cycles through the distribution and velocity growth. That's another trouble. They're dealing with potentially the category running negative, right? Their sales aren't looking great, but then you're also comping against ridiculous numbers last year. And Celsius has to comp against those for the next 4 quarters. It's not like it's just one quarter. They got to comp against these numbers for the next 4 quarters. So if Celsius sales are really bad for the next 4 quarters, when they're comping against these insane sales numbers from last year, it's going to make their revenue look horrible. It's going to make their sales numbers in general look horrible, man. That's frightening. On Friday, seeking alpha analyst Ironside Research with the latest firm to come out with in the defense of Celsius, right? And Celsius, it definitely does have a lot of defense, and I think you do have defense there unless the numbers really get bad. If the numbers we see from Celsius really get bad here and the guidance gets really bad, then I think even the people that have been coming out to the defense of Celsius are even going to move to the sideline. That's going to be a whole other dynamic there. And until the numbers get really, scary in terms of the numbers a company puts out, not Nielsen data, like company numbers, people will still come out to the defense. If I'm telling you though, if the numbers come out bad and the guidance comes out bad, these folks that are coming out to the defense of Celsius, they're going bye-bye. And they'll go on the sideline as well. While we think there is still a risk that the demand for energy drinks could be waning, we believe that more data is needed before declaring the death of the energy drink market. To conclude, we cannot say definitively that Celsius's growth story is over, but it does not seem to have entered. It does seem to have entered a new chapter, one in which management seems capable of meeting head-on. We'll see. We'll see if management they haven't gone through that cycle, right? They've just kind of been growth. We'll see what happens here. Yeah, I think it's going to be interesting to see if management meets that. Maybe they do, maybe they don't. But this is a big question mark stock right now. It's one of those you look at, and I don't know where the bottom is for Celsius. That's the bottom line. As much as I looked in the company, I've gone to different stores, seen kind of their product fit and whatnot, talked to a lot of folks. I don't know where the bottom is for this one, and that's scary because usually I can kind of think about a stock and I'm kind of like, I can at least put a number out there in my head that I'm like, I could see it maybe going down to this kind of in a bearish scenario. I don't even know if I can put a number out there. Like I said, 2025, something like that. Whew. Then you got to worry about, once you get down to 2025, let's say that's actually the bottom, right? Maybe it's not. Maybe now is the bottom, right? And it goes up from here. But let's just assume for a second 2025 is the bottom. Then you got to worry about getting all the way back to where the stock is down, right? And that's just like, ugh. And so that's why Celsius, as much as this one's kind of intriguing, and I used to own Monster many years ago, right? Did me phenomenal. I can't step up and buy this one right now. And the other problem with energy drinks is they come and go, man. Now, let's be honest with you guys. There's 2 companies that have been lasting in the space. One is Monster and one is Red Bull. And as somebody that worked for Walgreens for many years, as somebody that worked for Quick Trip and management for many years, right? I got to see all these energy drink brands come and go. And the 2 that remain super successful were always Red Bull and Monster. Outside of that, Rockstar was really big, then that started to fall off. Full Throttle was big for a bit, that started to fall off. Bang Energy was huge, like 5 years ago or so. And then that fell off. Monster owns Bang now. That was a whole complicated, crazy story I could tell you about sometime. Like, I've watched so many of these brands. There was Amp Energy that was like big for a little bit, and then that fell off. And so, I don't know, Celsius is going to be at a funny moment for the next, I would say, year or two, where it's either going to have to become Red Bull and Monster. And I think if you're betting on Celsius, you got to be bet that it's going to become the next Red Bull and Monster. Or it's just going to be another energy drink brand that kind of falls to the wayside, like pretty much all the others, right? So we'll see. We'll see how that dynamic goes over the coming years, but that's a situation.